In this video, we will talk about first analytical panel, called filters and volume. Here is that panel. Let's open any asset. Maybe the same 15 minutes gold chart. Okay, maybe short description. We have uptrend. This trend has just finished. Double top isn't the only sensible answer. From here to here we can see clear uptrend. Here is the top, of course, but here is the top for big institutions. From where I know that, you will say for a moment. Let's show volume of this asset. And what can we see now? Here we have the widest volume hill. In the same place distribution process on the chart. Here we have second the largest volume hill. The penultimate stop is a place where big institutions go out from transaction. After this lower top we can see steep descent. Last move is, mostly, for street traders, small players, and here we have simple moving average volume filter and text box to input period of this filter. 89 is quite big Fibonacci number. It should be good enough. That red line will cut off bigger volume from lower volume by simple moving average filter. That's the way how filter works. Now we can see only bigger volume. Maybe 1.5 filter harder? Better. But twice should be alright. And now we have volume signal filtered enough. Is it possible to see it in different way? We would like to see it on the chart, in horizontal levels. In that purpose, please, push volume S/R levels button. Volume S/R levels means volume support and resistance levels. Those are the levels. Firstly, which we can see is that lower than accumulation area and upper than distribution area, level of volume is weak. No lines are there. Accumulation process is going to end, breakout, and from here we can go in only one direction, up. Overbalance level is commonly break in those place. Trend has started. Some corrections and pullbacks as well. Trend is strong. Pull back to this top. Last tried to the most important top, which we called institutional top. Sharp descent to last support and rally for street traders. Without smart money. The last distribution process, sharp descent, and after that, not enough strength to make new, higher high. Double top. Whole movement is wide in time. It's important also. From here is possible only one direction, down. Let's find out if we are right. Let's update that chart, and see what is next day after. Our volume support and resistance levels. And now we can see, clearly enough, that we are much lower that day before. And without any important correction, which means that is huge impulse movement, as we can see. Now, we are trying to react in area of important volume support. Maybe, attempt to create a correction from here would be succeeded, who knows. Volatility means how much any bar or candle is changing in period of time. In this example, every bar or candle is 15 minutes period of time. This volatility button calculates the mean price change in every 15 minutes period of time. That's mean move in that time period. As you can see, this parameter is equal to 0.69, which means in random 15 minutes time, price can change by an average of $0.69 per ounce of gold. And big bars shows places, on the chart, where market create minimum 5 big bars in a row. Big bar is a bar bigger than volatility per bar can suggest. When market do that characteristic move, it means something. Those are places where big money plays. Density volume S/R levels means how restricted inner algorithms should calculates volume support and resistance levels. Optimally value is 3. This 3 means that big bar, whereas in the same time, big volume, is 3 times bigger than previous calculated the average bar in this filtered volume area. And here we have volume rate of change simple indicator. Commonly it's useful. Here is the area where we can talk about digital signal processing science. This filter removes noise from the chart. It's useful, for example, where we are thinking about Elliott waves description. Here we have simple function, which comparing bars. How we know impulse bar are not the same like correction bar. For example, impulse swing is fast and huge while correction move is slow and miserable. It's the same when we are thinking per single bar. The market is fractal as we know. And here we have 87.4%. It's mean that 87.4% of whole chart are correction moves. One more thing. It depends on how big value we input in the text box. Here we have example from 1 to 9. It means how restricted we want to calculate it. How big moves we are looking for. Default value is always 1.